Greetings, members, one and all of the Salivation Nation. We are being tested, not only as traders in the physical gold and silver, but also the metals themselves in terms of their price performance. The resistance is being tested, gold and silver. Let's explore! Indeed, as pretty much many of us had predicted, we're probably going to see some depressed prices for gold and silver through the summer. But likely the resistance that I had set forth at about $1,800 for gold, and also other analysts out there as well, and $20 for silver, are likely they're at dangerous territory as these prices are. As I record this video with the markets closing in just minutes, gold is down almost just over half a percentage point, and gold is down over $10, and it's $18.08 where gold is at in the ask price. Silver is down over 2%, in fact almost 2.3%. It's down 48 cents to $20.36. That leaves a gold to silver ratio almost at 90 now. It's insane, folks, where the gold to silver ratio is testing some of the highs that we saw during the pandemic in 2020. 89.25 for that gold to silver ratio. These metals are getting hit hard. And why? Well, the same reasons that we've seen before. I'm going to be referencing an article here from Kitco, but, before we even read it, we know what's going on here. There's a lot of activity that some people think it should push these metals up higher. In fact, earlier today it did. I saw gold kind of spike up a little bit. Silver not so much, but it did a little bit. Significant bearish near-term technical pressures for both metals are inviting the speculators to play the short sides at the futures market at the present. So gold hit a 6-week low and silver a 2-year low today. 2-year low. August gold futures were last down $6.80 at 18.10 and 60 at that time, and that's where we're at now. In silver, futures were last down 36 cents at $20.29 an ounce. The U.S. data point of the day was the Personal Income and Outlays report for May, including the Personal Consumption Expenditures Price Index component of the report that is said to be the Federal Reserve's favorite inflation gauge. The May CPE price index came in up 6.3% year on year, with the core rate up 4.7% in the same period. In the April report, the PCE price index was also reported up 6.3% year on year. Metal market bulls were briefly assuaged by the stable readings of the report, as many reckoned the numbers could have been worse, possibly prompting the Federal Reserve to be even more aggressive in its monetary policy tightening. In other words, raising interest rates 0.75 of a point. Raw commodity traders, including metals traders, have taken a track recently of being more worried about less consumer and commercial demand for commodities amid an economic recession, as opposed to the notions of higher inflation being supportive of raw commodity prices. Global stock markets were mostly lower over the night, and stock indexes were lower midday. But no, it's just one of those things where we are at. There's been a measure for inflation that has come out that means that we would unofficially be in a recession now, according to these numbers. But it takes a panel, some Bureau of Economic Board or something like that, to officially call it. But we very well may be in a recession now, according to some of these latest numbers. We're referencing an article here from BusinessStandard.com. It says gold was mostly quiet on Thursday, but faced its worst quarter since 2021 as a remarkable showing from the dollar kept investors away. That's right, the dollar index is a powerful force when it comes to commodities and especially gold. The dollar index is up, and gold is most assuredly going to go down. The bond yield as well going to play a role there. But that's kind of what we're seeing here. The dastardly dollar. Yes, indeed. It's having an effect for sure. Gold prices set to drop for the third straight month, having fallen about 6.2% this quarter. And again, the dollar index and rising yields played their part in gold's underperformance. Citi Index senior market analyst Matt Simpson said, but noted that gold price and other currencies had not performed as badly. So there you go. And keep in mind, other currencies are experiencing inflation as well, but their strength is much weaker than the dollars. The U.S. dollar hovered near its recent 2 decades peak and could record its best quarter in over 5 years, making greenback price gold more expensive for buyers holding other currencies. Bringing down high inflation around the world will be painful and could even crash growth, but must be done quickly to prevent rapid price growth from becoming entrenched, the world's top central bank chief said on Wednesday. Higher bond yields and interest rate hikes by central banks to fight inflation raise the opportunity cost of holding bullion, which yields no interest. An opportunity being the key word here. Gold and especially silver right now is a bargain compared to what we've seen it over the last couple of years here. Gold is certainly a metal that you hold in your hand in order to preserve that wealth. It's the most stable of the two metals for wealth preservation. Indeed, and it is why I have been accumulating more of it than silver over the past couple of years. Yes, indeed, I do believe in gold in that regard, but silver provides an opportunity. You know, we're close to resistance, and I call that resistance that floor, as it would be at around $20 an ounce. There are some in this community who have been consistent in predicting that silver could hit $19, $18, or even $17 an ounce. And they are proving themselves to be much closer to being right than I am at this point, as I made a prediction that silver is going to rise to $29 an ounce, which is a very small pullback from what I had predicted the year before, where I was completely and utterly wrong. And if things keep going the way they are this year, then likely I will be in the same boat again this year, maybe even worse, because silver didn't fall as much as it has now this year, but we'll see how it plays out. Nonetheless, I don't take my predictions very seriously, and neither should you. I do like to think that there's somewhat of an educated guess behind them, but like any analyst out there that's a professional and they get paid to do that, you know, their guess is really as good as mine in some regards. Higher bond yields and interest rate hikes by central banks to fight inflation. You know, this raises this opportunity cost for holding bullion in ETF and physical form. And by the way, ETFs, I'm, you know, personally not against anybody who participates in it, but I don't do that. And I actually encourage people now more than ever to try to get the physical, because the ETFs, you're participating in a derivative scheme essentially, where you don't take possession, it's never tested, and there's a lot more of them than there is the physical to back them up. And bullion's performance in the second quarter erased gains made earlier in the year as the spiraling Ukraine-Russia conflict lifted demand for the safe haven, with prices are back around levels started in 2022 at just above $1,800 an ounce. And by the way, they're saying that that war will continue and could continue for years. Looking forward, the bias will become increasingly bearish as rate hikes continue to come through and bring down inflation expectations. Ilya Spivak, a currency strategist at Daily Effect, said, adding that 1780 to 1790 is a critical support level. So that falls below the $1,800 level that we're seeing here. I kind of hope as a buyer that it does go lower. It'd be nice to get an extra ounce of gold for less than what I've been paying. Spot silver rose 0.4% to $20.80 per ounce. And yes, indeed, they're not saying where silver is going to fall, but likely some analysts had said $19 may be the bottom, or the top of the bottom, as it were. But we'll see how it plays out. But nonetheless, very interesting to see where things are going with the gold and silver prices and where they are at. Let me know what your thoughts are in the comment section below. I did post a video earlier this morning, which I think is one of my better videos, about the central banks and gold. I hope you will check it out. I will link to it in the end screen of this video or in the description or in the comment section. But it's one of the better videos. It seems like when I do videos like that I think will do well, they tank. And other videos that I don't feel as good about, they do very well. That's few and far between nonetheless. But there you have it. Let me know what your thoughts are. I'd like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.